What if I told you that one quiet decision made behind closed doors in Iraq could reshape global economics in ways no one is talking about yet? And before you scroll away, understand this is not hype. This is a calculated economic maneuver that has already started sending signals through financial institutions worldwide. So stay with me till the end, because what you're about to hear could completely change how you see Iraq, global currencies, and the future of emerging markets. And if you value deep research and real insights, make sure you support this channel right now, because stories like this rarely get told the right way. For decades, Iraq has been seen through a single lens: oil, conflict, instability. But what most people don't realize is that beneath the headlines, a quiet reset has been underway. One that starts not with oil rigs or military news, but with currency mechanics, banking reforms, and a strategic recalibration of Iraq's real effective exchange rate. Known as REER, a measure that tells economists how strong or undervalued a currency truly is when adjusted against global trading partners and inflation. And recently, Iraq has begun shifting policies that directly impact this metric, signaling to the world that it is no longer content with short-term fixes or dependency on external crutches. This matters because currency strength is not about pride, it is about leverage, trust, and economic independence. And for years, Iraq relied on a controlled dollar auction system that quietly dictated market behavior, limited banking growth, and created structural inefficiencies. But now that system is being dismantled and replaced with direct correspondent banking relationships, digital compliance frameworks, and monitored capital flows that align with international standards. And this is where the journey gets interesting, because every major economic transformation follows the same path: disruption, resistance, and then recalibration. Iraqi banks are being forced to modernize. Transparency is no longer optional. And suddenly, the dinar is no longer just a local unit of exchange, but a strategic instrument within a larger financial blueprint. And as digital payments expand and cash dependency shrinks, transaction visibility increases, corruption pressure tightens, and confidence begins to rebuild, not overnight, but step by step. And this is happening alongside massive infrastructure ambitions like regional trade corridors and logistics routes, designed to position Iraq as a connector between Asia and Europe, which means currency stability is no longer theoretical, it is necessary. Because trade hubs require predictable exchange dynamics, and this is exactly why economists are watching Iraq's REER movement so closely. Because when a country aligns fiscal discipline, monetary reform, and trade vision at the same time, it creates a convergence moment. And that moment is where we are right now. The climax of this story is not a sudden announcement or a dramatic press conference. It is the realization that Iraq is quietly shifting from survival mode to strategy mode, supported by international financial institutions, urging non-oil revenue growth, tax reform, banking oversight, and long-term debt sustainability. And when these recommendations align with internal political will, something rare happens: momentum. And momentum is dangerous for old narratives because it breaks assumptions. It forces markets to reprice risk, and it compels global observers to look again. And here is the part most people miss. This is not about a sudden currency revaluation or overnight wealth. It is about positioning. And positioning is what determines who benefits when global systems shift. As the world moves toward de-dollarization discussions, regional trade currencies, and digital settlement frameworks, countries that prepare early gain influence later. And Iraq appears to understand that now. So the takeaway here is simple but powerful: economic revolutions do not always arrive with noise. Sometimes they arrive with policy alignment, quiet reforms, and patience. And if this trajectory continues, Iraq may not just stabilize its economy, but redefine its role in global finance. And if you found this perspective valuable, take a moment to like this video. Share it with someone who still thinks Iraq is only an oil story. Leave a comment with your thoughts, because your engagement shapes future content, and subscribe to this channel because the next chapter of this economic shift is already unfolding, and you won't want to miss what comes next.